With rates getting lower and lower, it's really hard to find income these days. I'm here with Kathy Jones, Chief Fixed Income Strategist at Charles Schwab. Thanks for joining us, Kathy.
Thanks for having me.
I'm Amy Stone, income investing writer for Barron's. So let's talk about what investors can do with rates so low to generate income. I think there's some risks that people could go too far looking for yield. What's the best strategy?
Yeah, that's one of our concerns, that people just focus on a yield and don't focus on how to get to that yield or on their whole portfolio. So our philosophy is that in your fixed income portfolio, that the core holdings, like 75 or 80%, should be in high quality bonds. And right now we think the intermediate term bonds, meaning 5 to 10 years sort of average maturity duration, is the way to go. So high quality bonds, intermediate term duration. It won't make you rich in terms of the income, but it will deliver some solid income, probably with the least volatility.
Right, and why the intermediate term? Is that kind of the best income for the risk, or?
That's exactly the way we look at it. The yield curve is steep, meaning short-term rates very, very low, and then rates go up pretty quickly from the near zero to about 5 to 7 year maturity. So it's very steep right in there, and then it tends to flatten out a little bit as you get into the longer term bonds, which means you get the most income per unit of risk right in that middle part, that intermediate part.
And what kind of income level should people be shooting for? Should they be expecting, really?
Yeah, it's what they should expect, right? So if the risk-free rate is 1/4 of 1%, and you're getting a high yield, you're taking some sort of great risk, right? So I think of it in proportion to what the risk-free rate is. So in intermediate term bond funds these days, if it has some corporate credit in it, meaning investment grade bonds, you're probably getting a little bit north of 2%. It's not going to be fantastic, but it will generate steady income, and if you reinvest that income, of course, it grows over time.
And what about for people who say, they look at their retirement savings and they're like, I need at least 7% income to live off? What should they do?
That's probably unrealistic in this environment. So we like to, though, look at the whole portfolio. So in your equity portion of your portfolio, you probably have some dividend-paying stocks. You may have some REITs and MLPs generating income for a portion of it, and then you have the bonds. So look at the total income from the portfolio. And then sometimes you're going to have to probably take some principal, meaning when you rebalance because something's gone up a lot more than something else, rebalance, you may want to take those capital gains and use that as part of your income stream,
rather than take more risk. All right, well, can you tell us about a few funds that you think work well for that core fixed income portion?
So these come from our investment advisory group, and they're on our select list. So I haven't chosen these myself, but they're on our select list that's available to all the Schwab clients. One is the Baird Core Plus bond portfolio, again, intermediate term, high credit quality, and our analysts like it for many reasons, but one is that the management team has been together for a really long time. Another one is the Western Asset Core Bond Fund, again, another intermediate term bond fund. They have a fairly diversified portfolio and, again, a high-quality management team. And then if you're a municipal bond investor and you're in the tax bracket where you're looking for tax-exempt income, they've picked the American Century Intermediate Term Tax-Free Bond Fund. A similar reason, high-quality bonds in the fund, intermediate term, and a management team that they've evaluated and find very capable.
All right, well, those sound like good, safe choices for Barron's readers. Thanks for joining us today.
Thank you.
And thanks for joining us.